Cheryl. Heather's like, we do not want all of this chit chat about grandkids on the YouTube. All right, you guys see that okay? It's not my calendar, right?
No, it's not.
Okay, cool. Sounds good. All right. Well, hopefully you guys are here for the October real estate update. If not, you can still stay, but that's what we're going to be going over today. I think most of you guys already know who I am and what I'm about, but just a little bit of background. I do see a couple names I don't recognize. So, I've been an agent since 2004 here in Columbus. I'm also an investor. I have a property management company. I do some agent coaching as well. So everything real estate for sure, but a little bit of everything. So if you ever want to reach out to me, I need to be better on social media, like many of us probably. But you can follow me there or just email me, and I'm always happy to help. I know some of you do, and I'm always happy as I have time to help with if you're stumped or need some market data to support a listing or something like that at the last minute. I'm happy to help in any way that I can. Um, so what we're going to go over today is generally just market trends. So becoming the local economist of choice, this is more of like a broad picture, but we'll go over that. It definitely talk about interest rates. I feel like consumer confidence levels, the more that I've looked at those, seem to have a really, really big impact on what we're seeing on the ground from a day-to-day basis. And so I've started to include those in our conversation. I have a little bit more detail on that this month. And then there's definitely some interesting trends happening at the local level. We have a little bit to talk about there. And then also showing trends, and then a little bit about rentals with my, I get a dose of on the property management side. So I like to remind everybody, I think one of the things that Gary Keller, if you're with Keller Williams, always talks about is definitely being the local economist of choice. And I think in a market like we're in right now, like Jenny talked about a little bit, it's even more important than it has been over the last 5 years. So if you've been licensed for 5 years or less, this market is probably really uncomfortable. Not that the last 2 or 3 years have been super comfortable for any of us either, but I definitely think the last 6 months, there's been some pretty big changes in the way that real estate is done compared to the last, 3.5 or 4 years. And so I think it's more important than ever to be able to differentiate yourself from your competition. And one of the easiest ways to do that is just understanding the market. And I don't have a slide for this, but I will take a quick second. I was referred to somebody who had um, their listing on the market with another agent. They reached out. So I talked to them, and I basically told them after our initial conversation, like, hey, what I'd like to do is just take a quick look at your house and the neighborhood and then get back to you. And after getting back, after sending them like a quick market analysis via email, and having a follow-up conversation, I realized that they had no idea that they were priced $30,000 more than the highest sale had ever been in their neighborhood. And that's because the agent that they hired never did a market analysis with them and never talked to them about the market. So what, although for most of you, I hope going on a listing appointment and not knowing what's going on in the market is not something that you do. If that is you, please don't be embarrassed. But my goal today will be to give you some data and encourage you that, although sales aren't super easy to come across maybe in this market that we're currently in, even if you're a brand new agent, taking one or two of these things and knowing them really well, and then using them in front of a client will really, really help you differentiate you in probably 80 to 90% of circumstances. Now, sorry if you come up against me or Jenny in a listing appointment, then maybe you won't see that. And sorry, that's no offense to anybody else who's down here who I did not mention. So I promise this isn't that she's just the only one, except for Connie, that has her camera on. And Connie, you too, you're going to do great, but you didn't even know your camera was on. So that's okay. Um, but, uh, but just make sure that you always can come in and give them a piece of information that can differentiate you. And this works also on the buyer side. Um, Ashley, my wife, who's selling real estate out here in Colorado, she just had it happen on the buyer side with a 1.2 to 1.5 million dollar buyer with an agent that had never done a market analysis for a house they were looking at, never given them information on what's going on. And if you think the market is slow in Columbus, you should check out Denver, Colorado Springs. Either way, it's true across the board. Buyers are starving for knowledge. And the reality is, with Zillow and all of these other things, like showing them listings can be helpful with the number of properties that are on the market, but understanding what's happening in the market and what that means for buying and selling decisions is a really valuable asset for you. So kudos to you for being here. I would encourage you to take one or two of these things and really put it into action. All right, interest rates. They continue to be the story, in my opinion, although I'm starting to get moved a little bit with the consumer confidence readings. But I think consumer confidence is driven partly, for sure, by interest rates in our environment. But the good thing that I'm seeing with the interest rate trend is that although we're not the best that we've been over the last 12 months, we had a brief period last year, right around this time actually, where rates were a little bit lower. The really good thing about interest rates, in my opinion, over the last couple months is that we've seen a consistent downward trend. So if you look here, and if I went back and looked at longer periods, you would see that many times when interest rates dropped like this, it happened really fast, and then they rebounded really quickly. We've kind of seen more of a gradual trend down, and I think from a lot of stuff that I'm reading, the Fed is a little bit worried about jobs, which isn't a great thing for the overall economy. But it seems like there's more consensus that interest rates are going to be continuing to move downward, which I think can only help. As we move into consumer confidence, like I said, it feels like the feelings of people, which just shouldn't be a surprise to those of us who are in real estate sales, right? That feelings drive more than logic. I think for those of you that have taken bold, or maybe you're in bold now, I think the bold law is logic makes you think, emotion makes you act, right? So the reason I'm liking consumer confidence is because even though it feels like with interest rates being lower and inventory being higher, that we should be seeing all these buyers jumping in, what we're seeing in the consumer confidence data, which is down here, is that consumer confidence still is remaining fairly low. Especially when we compare it to just a year ago. Last year in December and January, we were all the way up at 75. And now we're still down at 61. Now this big drop happened gradually, but then pretty suddenly around the tariffs happening in April, and then we kind of bumped back up in the summer, and then now we've kind of slid back down again. And I think that's maybe a really good way to describe the last few months in real estate, right? Like things were a lot slower in the spring than normal. And I think it happened right when the tariffs got announced. Then everybody realized the tariffs weren't going to be the end of the world. And so people started moving again for a couple months. And then the last couple months have kind of felt like okay, like people still just aren't feeling comfortable. At least we're seeing in our business a lot of people pushing off to next year or like willing to look, but not necessarily. I'm seeing that on my listings, willing to look, but lots of, oh, this is the first time we're out. We're definitely not ready to make a decision, those types of things. And I think this really kind of captured that in a way that I haven't seen a lot of other stuff. Because in my mind, the way that the consumers behaved over the last few years has been a lot more tied to interest rates. And so, like in the current environment with interest rates, I was expecting to see some buyers jump into the market. And although we've seen some dipping their toe in the water, I don't think we've seen a ton of them really like actually pulling the trigger. And this has been the driver. So actually, I'm going to go to the next slide because I think most of us like pictures more than numbers. Um, but you can see that when we look at the expected changes in price during the next year, that even though things were really good in 2021, remember the interest rates started going up and people started to realize prices were going up. And then you saw consumer confidence conversely drop, right? And then if you guys remember, if you were in the market during the second half of 2022, it went from multiple offers everywhere to like a screeching halt when interest rates went up. But really, another thing that was happening other than interest rates was consumers expected prices to go up a lot over the short term. And it seems like that's actually driving more of buying behavior than the interest rates. And so I'm going to continue to keep an eye on this information for you guys. I don't know that, again, it only gets updated once a month, anyways. But I really do. This is something I'm going to start to keep an eye on because I think that it's been more right than it's been wrong. And it's something that I had previously not even really looked at. Um, so we'll continue to keep an eye on this, but overall, current economic conditions, things aren't looking, the consumer's not feeling like things are looking great. And so I think that's leading to people being reluctant to make big buying decisions. All right, if we jump into the real estate data now, so we can see that we're still remaining below, and this is national, by the way, from realtor.com. We're still below pre-pandemic, and we're not really pushing upwards the way that we have been throughout the last couple of years during this time. So the last 3 years, we were increasing our inventory levels all the way through November, which if you look at years past was very abnormal. This year, we've kind of plateaued here really since what, June or July. And so we're in definitely more of a traditional cycle here. So Jenny, just like you talked about with other pieces or buyer behavior in general, um, or and how to list within a range and what to expect from that result, we're seeing the same thing. We're in a lot of ways, I think what we're going to see in the data as we go through this for the next 30 minutes is really a return to more of a normal cadence, which has, we've been anything but normal for the last, what, really 6 years, right? And so it's weird to those of us, even those of us that have been in the market for 20 years, a quarter of that time we've been in a different market. And so it's not like, don't feel bad about feeling a little bit weird, but I do think we can start to look to more historical norms. Um, and the total listing count is just a way to define active and in contract. So again, we're still up 13% year over year, but we're really trending more like the trends were pre-pandemic versus post-pandemic. Pending sales. So the good news is we're not getting any worse. The bad news is we're not really getting any better. So pending sales are even year over year. We definitely are well below historical norms, which we'll talk about again. But yeah, we would love to see some red here, if at all possible, as we move into next year. Days on market, kind of the same story. So obviously up year over year, but starting to kind of follow what I would consider to be a normal trend. trend line with days on market. So definitely a slower market than what we've seen. But if we jump into median list price, this is the craziest thing for me. So all of these doomsdayers are out there like, now that the inventory is high and the market's starting to normalize, like all the people on YouTube are back out talking about how the market is just going to completely nosedive. This is the bubble that you've been waiting for. It actually happened in the stock market Friday after Trump announced that maybe the tariffs were going to go up again on China, and the market free falled like 800 points. And everybody was like, oh, here's the crash that we've been waiting for. And yet now it's up 500 again today. So I think that a lot of the doomsdayers are overstating it, but they're going to use these opportunities. So be prepared to have these conversations with your clients about why, although the market's not what it has been the last 5 years, the fundamentals are still in pretty good shape. And this is one thing that is good news. So we're seeing the percentage of properties that are having price reductions is actually decreasing. And if you look at most of the pandemic years, we saw the percentage of price increases going up all the way through like October and November. This year, they started dropping the percentage, that is, started dropping. It peaked in May and it's been slowly coming down. That's not happened at all. And so, again, to me, that's another sign that the market, the sellers were a little bit behind, right? If you're going on listing appointments, you're probably feeling like the sellers were still looking at their neighbor that just sold a few months ago that had a million showings. And to Jenny's point, for those of you that were on earlier, everybody was pricing at the very high end of the range. So if you told somebody their house was worth 650 to 700, everyone was choosing 700. Why not? Because buyers would pay it, right? Now you have to have the conversation, are you willing to sit on the market for 4 months in order to get the 700? And that's still not guaranteed, right? Because we're moving into the winter time. So are you willing to wait? And so now the question is, do you want to just go ahead and take your, if you have to have 700 because you don't need to move, right? Is price or speed more important? From 2020, June through 2022, June, it was, I want both. And you said, okay, awesome, I can get you both. That is not the case anymore. You have to make a choice, one or the other. Do you want fast or do you want the best price? Very rarely are those two things both going to happen for you in today's market. All right, regional comparisons. I'm not sure how this maths, to be honest. So we said the national average, the median list price was 0, but yet 3 out of 4 regions are negative, one by 3.6%, and then one is 0, and yet the average is 0. I feel like I know math pretty well. That doesn't math in my head, but I'm assuming that realtor.com knows what they're doing. So here we go. But anyways, long story short, we're not seeing a huge decrease in pricing. Okay. We are seeing it a decent amount out here in the West. However, when you saw prices go up by 150% over the course of 2 years, you're going to give a little bit of that back at times. And so that we're seeing that a little bit. There's also tons of new construction. And frankly, we had seen this in the South first. I think they're eating up some of their new construction. But we're still seeing an overabundance of inventory in a way that the Midwest just doesn't even know out here. And so that's what's leading to that. But either way, not like 2008 price drops here. Like that, we are not going into, at least there's no evidence of it up to this point. We're not going into a huge real estate recession from a pricing perspective. All right, I'm going to stop for a second. If anybody is outside of Central Ohio and wanted to ask any questions, does anybody have any questions on the national data? No? Everybody's good. All right, I'm going to jump into Central Ohio. You guys can feel free to chime in, please. I guess I didn't give you permission since we do have a few new people on. Please don't hesitate to interrupt, put stuff in the chat. If something goes in the chat and I don't see it, please somebody let me know. But basically, total market here in Central Ohio, we were, it was actually an interesting month. And like I said, I think that there's definitely some trends that are starting to turn. So the number for sale was still up year over year by 24%. New listings were up a little bit by 2.5%. But the thing that was like good to see from a market stabilization perspective is the solds were up 4.3%. Why is that important? The difference between new listings and solds, when there's more selling than coming on the market, then that means inventory goes down. And we saw that from August to September. If we go back to last year, you can see that we were increasing inventory all the way through October before we started going down from a seasonality perspective, right? This year, we've seen a slight drop. Now, that was such a small drop. We could see things bounce back again in October. But personally, I've been hearing more, and I don't know about you, but Jenny, you just mentioned waiting until spring. I just had a conversation with somebody who was thinking about listing. They decided to wait till spring. I would be very surprised to see the inventory jump next month or this month on an overall basis compared to September. But again, we will see. But this is interesting news. All right, if we jump into Dublin, actually from again, we saw a drop month over month. In Dublin, we actually peaked inventory wise in July, right? And so last year we didn't peak until September inventory wise in Dublin. All right. New listings September over September were only up 1.8%, but solds were up 9%. So that's an 8% difference. That's good if you want to kind of keep a lid on inventory. And even though inventory was up year over year by 18%, last year we were talking about 20, 30, some cases 40% increases. So these are all signs that the market is starting to stabilize and sellers are getting realistic. If they're not going to drop their price in order to be realistic, they're just taking their house off the market, which I know isn't great if you've paid for all that listing marketing, but it is something to show that like the overall market is starting to understand what's happening and they're responding accordingly. So they're not living in a dream world basically. And hopefully that's because you guys are having these conversations. Hilliard, we saw a huge increase in inventory still year over year. New listings, though, were down 11%. And when we look at month over month, new listings were down by 20%. And solds, though, were up by 14.4%. So again, I would expect that we start to see those numbers normalize in Hilliard as well. I'm not sure. I haven't dug deep enough into it, but it seems like there was maybe a spike in new construction or something like that. That's a really big jump in year over year listings. And Hilliard obviously does have some new construction, so that would be an interesting thing to dig into if you're a Hilliard agent, for sure, to see why that was and be able to talk about that. All right, Kim Mills wants to know what we're seeing with buyers in Dublin as it relates to redistricting. She has a few buyers who are definitely taking a pause until that's finalized. Anybody, Francis, you can always have the slides. You just have to email me afterwards. Anybody have any feedback on Dublin before we move on around redistricting? Have you guys had buyers pausing until that gets decided? Kendra, you usually have. Do you have any Dublin buyers?
Thankfully, I have wrapped up and closed all of my buyers in the Dublin and Powell area for now.
So they're just, well, that's not thankfully. I mean, I'm sure you'd be okay if you had 15 more.
Right,
However,
right.
Yeah, they're just gonna be complaining to you now that they've bought if things don't go their way. But Kim, if you want to jump on and ask any questions or talk about anything in particular, or if not, that's okay too.
I'm sorry. I'm trying to get myself I'm sitting outside, sorry. Yeah, I just am curious because I had people, I mean, probably like 3 weeks ago, 4 weeks ago, way more engaged. I think once those 3 versions of the maps came out, I feel like it obviously, it showed that there's a lot of different scenarios that could happen. It reminds me of when Olentangy went through this. So I was just curious because, you're trying to stay in front of these guys with what's coming on, but right now, I have one person that really wants to stay in Jerome and one person that really wants to stay in Kaufman, and I'm like, I don't really know what to tell you right now. So, I was just curious.
Yeah, I mean, my thought around that would be, and I think number one, like most buyers don't need a lot of reason to pause, right? They're already uncomfortable about 10,000 other things. And so it's like, this is the one thing, but obviously school district, and especially if you want to be in a specific one, Dublin it does remind me of Olentangy, but it's got to be one of the most wild swings from like one to the other that I've ever seen, and it impacts some pretty traditional neighborhoods where things have been the same for a very long time. um and so yeah, I would definitely just, obviously I know you know what you're doing, but to somebody that wouldn't know, I mean, just continue to focus on the overlap on those maps. So any house that were to come up, that's guaranteed. Like, I mean, I don't know that anything's for sure guaranteed, but if on all three maps that house is going to go to the neighborhood, to the school that your person wants to be in, those are the ones that you really want to point out. And again, talking about a way that you can add value that can't be done by Zillow or Chat GPT or any of the, and maybe Chat GPT could actually do it. But like those are the ways I just, like that's what I talk to my team about all the time. How do we add value that can't be done automatically, right? Like that PDF that they put out, like there's no search on Zillow for the neighborhoods that all are going to go to Kaufman no matter what. So how valuable as an agent are you? Or same thing with Jerome. How valuable as an agent are you if you're able to say like, hey, I know there's tons of uncertainty with these school district maps, but I went through and figured out that these 4 neighborhoods are actually going to go to Kaufman no matter which one they choose. So these are the neighborhoods that if something comes up in, if that's where what's caused you to pause, like these are the neighborhoods that we should focus on. And then, you may not send these to them, but you may like, hey, these are the neighborhoods that are most at risk, right? Like these are the ones that are going to switch from, that are almost guaranteed to switch, right? And I think, if you do have a lot of buyers looking in one area, especially if it's in Dublin right now, I think those are things that can absolutely be worth your time, and ways like they're never going to leave you if you do that. And I know you already work at a really high level. That's your jam, the experience. But I just think that putting something together like that would obviously save you time. um, and then for those of you that don't know, and this is a little bit of a squirrel, but I'll go down it since you brought it up, is you can create map overlays in the MLS. So if you were to find those 4 neighborhoods, you could create a map, you could create a polygon search and name that map overlay. So you could create a search that only focuses just on those areas of overlap. And then you only have to do it one time, and you can send it to, as many buyers, or you could set it up as an additional search in their portal. So all right, that was a major squirrel, hopefully helpful squirrel. Um, thank you, Kim, for coming and also participating. Anybody else have any feedback on that or anything else that we've gone over so far, or should I keep going? All right, well, I'll keep going. All right, Olentangy. Whew, If you have buyers looking in Olentangy, they're not redistricting, and the market looks really soft, probably partly due to new builds and more going on the MLS. But solds were down in September by 20% year over year, and new listings were up by 26% and 14% compared to August. So if you have somebody looking in Olentangy, I guarantee that there are deals to be had amongst that inventory. Inventory is up 68% year over year. Definitely part of that is new construction, I'm sure. New construction has a lot of deals between now and the end of the year. If you're not super into new construction, most of the companies are publicly traded, so they have to have good reports at the end of the year in order to keep their stock price up. I think based on what I've been hearing from new build reps, there are going to be some deals to be had here as we get into the end of the year. They want to be able to tell their shareholders that they're not holding on to a bunch of old inventory that's already built. But then there are also going to be, there always are, in the fourth quarter, reloads, and districts like Olentangy and Dublin tend to have more of those types of homeowners in them that are maybe in sales jobs that are going to get moved. As you guys know, there aren't very many companies left that aren't returned to work. I wouldn't be surprised if some more companies get more strict on return to work, and usually January 1st is an easy time to have that happen. So there are going to be sellers that need to sell. So if you have buyers looking, maybe considering multiple school districts, maybe they're considering Dublin, but they're nervous about the redistricting, Olentangy looks like a great option for somebody that's buying but doesn't have to also sell in Olentangy. So these can be also useful, though. Remember, on the listing side, it's the complete opposite, right? So if somebody calls you talking about listing their house in Olentangy, but they don't have to move, this is a great chart to show somebody that, although I'd love to sell your house, how important is it to move now versus getting the best price? We may want to wait until spring. You are a hero when you do that to somebody versus making them get their house ready and then having no showings because you didn't talk to them about the fact that the market is very, very soft. And just because their friend in Westerville sold doesn't mean they're going to based on the numbers. And I have no idea. Maybe Westerville looks the same. I didn't look at that one. So look at that one too.
So
All right.
real
Go
quick,
ahead.
right? What are I'm sorry that I missed. Why are sales, do you think, down in Olentangy compared to I mean, that's always been such a hot school district. And what are the reasons that we think they would be down?
Yeah, I don't know. I would be asking you guys if anybody has feedback on anything in particular. I haven't seen any news that would lead me to believe that there was a specific reason. I think the increase in inventory is probably, and I should have pulled this when I saw this,
Okay.
could definitely be new construction, that they're listing more properties on the MLS, but the sales being down as
That's
much
a
as
huge
they are
for
is interesting.
yeah, I mean, they've had this reputation with their school districts as being really good, and that's really just interesting. So, okay, because I look at
Yeah,
these.
and especially with the fact, like if Dublin and Hilliard, for example, were also down, then it would be like, okay, whatever. But Dublin was up by 10%. So that's a 30% swing between Dublin and Olentangy. You were about to say something else, Jenny.
No, it just sometimes when we look at these numbers, I don't know if anybody else feels that way, but trying to quantify them to be that expert. Because when we look at sales being up, but new listings aren't up. And then we look at so for sale is up 68%, new listings are only up 25%. I'm sorry, I'm going to be dumb. Can you explain to me why when I look at new listings, that's how you just mean you're looking at listings for that month over month, and then we're just looking at what's the for sale number. How are those two numbers different?
Yeah, so the for sale number is the combined inventory. So what would cause that to be higher year over year is that the past months
Mm-hmm.
also had higher new listings,
Okay, so
right?
for the whole year, we're up
Well,
68%.
this is just September of this year compared to September of last year. But what I'm saying is because we're looking at year over year,
Mm-hmm.
you could have had that increase happening over time over the
Okay,
last year. So if every single month new listings were up by 5%, then
okay,
that could lead to a much higher, because it's 5 times 12 is
okay,
60%, right? But
okay.
here, what's also driving that is, remember, it's not just new listings, it's also the solds,
Mm-hmm.
right? So if you're having a small, like let's say that new listings number was only 10%, but your
Mm-hmm.
solds were down by 20%, then you just added 30% more inventory to the market just in the month of September.
Okay,
And in this case, it's even worse, right? Because new listings went up by 26%, but solds went down by 20%. So if you add those together, that's 45, almost 46% of inventory that either wasn't added or sold last year in September that didn't this year.
okay.
I know those variables, it tends to get a little bit
Yeah, I know. I
confusing.
sit there and go, gosh, I used to be a mortgage person. I used to know numbers really well. I'm looking at
But
this.
again, I would encourage you guys though, like, don't get bogged down. Like, that's a perfect example. It's a great question, and I'm always happy to go into more detail, but don't feel like you have to go into this much depth. Remember, you guys are all experts, and this is hard to wrap your head around for you. Keep it really high level for your clients and just say like, look, we are seeing a softer market in Olentangy than we're seeing in either Dublin or Hilliard,
Okay,
meaning there are more properties for sale compared to last year, and there's fewer selling compared to last year. Now, why that is, we're not 100% sure because the data doesn't get into that level of detail. But what we can tell you is that if you're considering both Dublin and Olentangy, for a number
might
of
get more
reasons,
for our
including
money. Yeah,
redistricting, Olentangy might be a better option.
gotcha. Cool.
Great question. All right, here's another example though of how the market is starting to normalize, in my opinion. So we're actually seeing new listings down, solds down a little bit. So again, this kind of goes in line with what we talked about earlier, but we're definitely seeing sellers get more realistic about what's happening in the market and going into what I would consider to be a more normal seasonal trend where things start to trail off. Um, and so that's that. We've kind of beat that horse, I think. All right, days on market. Again, we're higher than last year, but trend line still fairly similar. So we always go up in days on market as we move into the end of the year and see fewer buyers in the market. The one thing that has changed is the percentage of original list price. Last year in September, we were at 98%. This year, we're at 96%. So that definitely represents, 2% on a $500,000 house is not nothing, right? So we're definitely seeing sales prices soften a little bit from the original list price, though. So remember that. So original list price, I think last year sellers were still pretty like aggressive on listing high. And like you said, Jenny, I think sellers and agents are getting more realistic about where they're listing properties in general. And that's why we're seeing the percentage of properties with a price reduction coming down, because sellers are saying like, no, I've listed this at a fair price based on what sold because my agent told me I can't list it too high. So I'm not reducing my price 1 week after going on the market just because I didn't sell, right? Whereas even 6 months ago, like sellers were freaking out if they didn't sell in the first weekend. And I think sellers are definitely getting a little bit more strict on that. So here we go. Remember this. Obviously, lots has changed, right? This trend is not a fun one. However, we're still in a very strong seller's market from a historical perspective. Now it may not feel that way because of where we've come from. But just remember, like, it's our job to keep our clients calm. They're emotional. They're going through a huge change. So educate them on this at the listing appointment, that we're not in the same market that we were 6 months ago, and certainly not 2 years ago, or certainly not like 3 years ago. But we are still in a seller's market in general. And so keep that in mind and react accordingly, not don't spaz. New construction is a little bit more all over the place, like we talk about in terms of months of inventory, because we don't get every single property, or we don't even get close to a majority of the properties that are actually available to buyers put on the MLS. So it's much harder to track. Average sales price was down in September, not a lot, but 1.15%. And interestingly enough, to go and fly in the face of what I just said, the active prices were up still. So it does show that some sellers are still a little bit unrealistic. So the gap between active and sold price was a little bit bigger than we've seen since last summer, but you can see we're still kind of in a reasonable range. And the reality is, especially as we move into the winter time when there's fewer listings coming on the market, if you get a couple big listings, like if you have a land listing or a $10 million house or something like that, it can definitely throw off the numbers a little bit in a given month, especially when we're dealing with average versus median. So just keep that in mind. But overall, I would say, again, the general trend in Central Ohio is not this huge reduction in sales prices. And so anybody that's expecting this huge crash in sales prices, there's no data, at least up to this point, to support that. And honestly, I should have this data, but I want to say this is the first month that we've even seen a negative number here of any kind over the last several months. And so just something to keep in mind. Now, I will say the jump from August to September was quite a bit larger at minus 5.8%. So, and you can kind of see that on the graph. This was a pretty big drop, whereas we really didn't see a drop like that last year until December to January, which is pretty normal during that time. So now if we see a second month in a row of something like this, then that will be a trend that we'll want to keep our eye on for sure. But as of right now, I still feel like prices in Central Ohio are fairly stable. All right, showings. So this is something that we kind of track manually from showing time. You can see that we're still seeing more showings per week than we have over the last 3 years. However, we're kind of trending, last week at least, we're trending back down towards 2022 levels. But in general, we're in a pretty tight range here. So even though technically, we could write some sensational headline about how showings are up, but really they're not up by a lot. And if we look at showings per listing, that's really the story to tell. So showings are up because buyers are looking at more properties per buyer. But the showings per listing are actually down compared to last year. So we did see this little bump last week, and Allison, my awesome director of ops who puts this together, she got on the phone with me this morning and was like, so I'm like nerdy sad this morning. And I was like, what do you mean? And she's like, the showings per listing went back down today. So yeah, they're back down. So again, not off of the trend line in any way. It's been a little bit more volatile this year. There's been, as you guys know, economically and nationally, although last year was an election year, but I think it was more consistent uncertainty. This year, it feels like it's like a yo-yo, like 1 week it's great news. And then, like I said, Friday, China and US started saying that they're in a trade war basically again. And so it's just like, it feels like as soon as we have good news, like the hostages are being released, and then now we're increasing tariffs on China. So it's like back and forth. So anyways, long story short, we're still in the same trend line. Mortgage applications. So interestingly, over the last couple months, I've been talking about the mortgage applications. But one thing that we've seen happen is despite these lower interest rates, and this is where that consumer confidence thing, I think, starts to play out really well. Despite these lower interest rates, the number of mortgage applications, which is the blue line up here, has not really increased. Actually, it's decreased after jumping briefly and very small amount when rates came down a couple weeks ago. Now it's kind of settled back, and we're just not seeing any kind of sizable or continued increase in purchase mortgage applications. Now, I will say the refis tend to be a lot more volatile based on this information. And so when rates dropped, refis spiked. But now it seems like they've kind of settled back down, not quite to where they were before, but certainly not. People are less excited. And on this, I think there's some people that are kind of waiting to see if they keep going down. And this is like a normal mental thing. Jenny, you could probably speak to this at a much higher level than I could. But like, it's funny because everybody says they're going to do things once rates go down, but if rates stay down, then people are now like waiting to see if they're going to go down further instead of just pulling the trigger. It's a wild phenomenon. All right, I've gone over this the last couple months, but I just still continue to feel like it's a relevant stat or graph. And that is that although we are really we're higher on inventory, we're still nowhere near pre-pandemic inventory levels. But the biggest thing is the buyers. Like there are just so few buyers compared to what is normal in the market. I mean, look at this. Like back pre-pandemic, we were almost never, even going all the way back to 2012, we were never below 2 million buyers, and now we're at 1.4. Like that's wild. Our population is increasing. You have all of these, and so I just really think that affordability, and I don't have a chart on here. I should need to make a note to look at affordability next month. I do know that affordability has dropped or has gotten better after being really bad when rates spiked. I have to imagine that at some point the 20 somethings who are all renting, once affordability reaches a certain point, they are going to jump into the market. They're just doing everything later. They're getting married later. They're having kids later. I think that's reducing their need for like that feeling of needing their own house, obviously on top of the money thing. But I think all those things have been at work to keep that group of buyers on the sidelines. If we see rates go back into the fives, the surveys say it, but I also think just like logically, that group of people has to start considering buying again. And especially if we keep inventory high, so it's not crazy bidding wars and you don't have to have millions of dollars. You see rates go a little bit lower, and you see them stay low. Like if we go into spring with a 5.75% interest rate, my prediction is some of those people that have renewing leases decide to consider buying. So if you have a sphere, Jenny, I know your kids are in that range. If you have a sphere or you have relation to a sphere in that range, I'd be doing some marketing here over the winter if rates continue low, because lots of leases come up in the spring and summer. So you're probably not going to see many of them breaking their lease to do this. But going into next spring, if we're lower rates, I would not be surprised at all to see some of those buyers jump in. All right. We are seeing rents decline a little bit. This is kind of a seasonal thing, though, a little bit earlier than last year, it looks like. But again, it's pretty minute. a $10 change year over year, but $50 change month over month. We just saw that small spike or the big spike in September for some, or in September, August, September for some reason. But anyways, overall, I would say the rental market is stabilizing in Central Ohio. We're almost through all of the like delayed construction projects that started during COVID but don't finish. And as soon as those come online and those people quit giving a ton of incentives to fill up their building from 0% occupancy to better than that, I think we'll continue to kind of see rent prices start ticking back up. Single family home rental prices are still in really good shape year over year. I think most places are either flat or you can see some increase. And certainly tenants or landlords who have owned a property and had a tenant in their property for more than a couple years, most tenants are willing to absorb a, 2 to 4% increase and not move because they really can't go find something else for less. So, all right, sources, pretty normal sources, but I felt like there was more to talk about this month. It looks like you guys did too, since most of you stayed on. Anybody else have anything to add before we jump off? No? All right. Well, go ahead. Who is going to talk?
Oh, I was just going to say thank you, Troy.
Oh, yeah, absolutely. So per normal, if you email me at troy@marshhomegroup.com, you can definitely, I will send a copy of the slides. I know one team has this video up on their YouTube channel, usually within 24 to 48 hours, but definitely by the end of this week, it'll be up there. So don't hesitate to reach out if you want the slides. So thank you guys. Have a great
Thanks,
rest
Troy.
of your week and a great month. I'll see you next month.
Bye.
Bye.